While the crypto markets were crashing over the weekend, Luna, the native token of the Terra blockchain, hit a record high. Luna is the 10th largest cryptocurrency with a market cap of almost $63 billion, according to CoinDesk data. Joining us now to discuss is its creator and one of this year's CoinDesk most influential, Terraform Labs founder and CEO, Do Kwon, based out in South Korea. Welcome, Do. Great to have you on the show. Maybe you could start off by explaining what Terraform Labs is for those who don't know out there, and perhaps go over some of your background and what led you to founding a project like this and what problems you're trying to solve.
Yeah, so Terra is largely two things. It's a layer 1 blockchain that is focused on algorithmic stablecoins. It is currently the third largest smart contract platform by total value locked, and pretty sure one of the largest by usership. So the idea is that there's two different currencies in the Terra network, Terra stablecoins that are pegged to different types of fiat currencies, and Luna, which is a staking asset in the network. And the stablecoins find their peg against their various fiat currencies by allowing swaps between the Terra stablecoin and the Luna native staking currency.
All right, so an algorithmic stablecoin. So Terra has created a whole host of tokens to support the ecosystem, including Anchor, which is a lending product. Luna, you mentioned staking. Mirror as well, which is a synthetic asset that mirrors real-world assets like stocks, ETFs, and such. Now, Mirror protocol has caught the attention of the SEC. The SEC publicly served you at Messari's mainnet conference this year. Can you explain what happened?
Just somebody handed me like a packet of paper right before I had to go on stage, and I did. And then after speaking at the conference, there's stuff out on Twitter, and people talking about like people getting served, and that's when we realized that the SEC gave us a packet of paper that was supposed to mean something.
Yeah, well, there was a lot of confusion and curiosity over the incident because a lot of journalists asked you, were you served by the SEC? And you said no. But why did you do that? And do you feel like maybe you burned some measure of public trust when lying to journalists about not being served?
No. So I don't really feel like we lied. We were approached by, I think, specifically one journalist, at least me personally.
Brady Dale,
no, but in any case, right when we walked off stage, that's when we were asked the question. And then as we were given the packet right before I was about to walk on stage, I, wasn't really entirely sure what happened at that point in time.
So how do you want to be regulated? When it all comes out, I mean, right now, of course, you're suing the SEC, but ultimately you might end up being regulated by them. And we have these hearings going on right now in front of Congress. How do you want to be regulated? Do you think you should be regulated at all?
Well, so I think we should keep an open dialogue with regulators insofar as, it's, of a point of concern in their specific jurisdiction. And I think whenever you create a new piece of technology that is controversial, that has massive impact, there's going to be regulators that are concerned and want to engage with you on a dialogue to make sure that things are safe and that people don't get hurt. I don't, pay a specific attention to U.S. regulators over others because reason to. But insofar as any regulator approaches us and wants to engage in good faith, we will make sure that they can be better educated and that the technology moves forward in a direction that is beneficial to the public.
All right. Well, we have some congressional hearings happening in the U.S. from the House Financial Services Committee, big hearing yesterday. Congress is in the process of exploring and discussing legislative policy on crypto. How do you think policy should be shaped?
In the U.S., I have very little interest.
Fair.
So what do you say to those who argue that algorithmic stablecoins are actually the most unstable type of stablecoins there is, and that they shouldn't even be called stablecoins? They cite the iron and titanium issue, the debacle from a few months back. But what are you doing differently, and how do you allay those kind of fears? Can you allay those kind of fears?
So I think that type of stereotype is a perfect recipe to get wrecked. And what I like to say is that silence is a perfectly good option if stupid. So what I mean by this is that, for a lot of algorithmic stablecoins like Iron Finance, Basis Cash, ESD, DSD, the main problem wasn't that they had an on-chain programmatic monetary policy. The problem was that the incentives that they were giving to get people to hold the algorithmic stablecoins was not sustainable. This is essentially a Ponzi scheme whereby if you hold 1 unit of our algorithmic stablecoin, we're going to give you more than 10x the amount of algorithmic stablecoins over the year. So, of course, if you have yield farms like this that are recursive in nature, once a more shiny opportunity comes along, or a significant amount of capital leaves the algorithmic stablecoin, then the entire schema breaks down. What was unique about Terra is that all the use cases and the reason why people hold Terra stablecoins has not been driven by these recursive incentives. There's no incentives in Luna to hold the Terra stablecoin. It's because people can do 3 things with Terra stablecoins that they can't do with either fiat currency or with other stablecoins. They can spend it really easily in multiple different countries. They're using Anchor Protocol at a rate that offers the highest risk-adjusted yield in crypto at a tune of about 20%. And they can invest in any asset class that they want through things like, Mirror Protocol, Nebula Protocol, in synthetic, equities, ETFs, other cryptocurrencies, and what have you. So it's fundamentally, in my opinion, a more decentralized and useful type of currency than any other that exists in the market.
Right. Well, algorithmic stablecoins require a support level of demand to have operational stability. They also rely on independent actors with market incentives to perform price stabilizing arbitrage. If a major crisis came along, that could potentially destabilize those assumptions. Does that make Terra Luna vulnerable?
Well, I mean, the same argument could apply to any currency regime. So for the same reason, would you deprive developing countries of the ability to have, sovereign monetary policy? And I think the answer is no. And I think the decentralized economy, as codified by DeFi and various different blockchains, have, deserve to have their own sovereign decentralized currency. So what we like to tell people is that a decentralized economy requires decentralized money. And I don't think that decentralized money is going to be Circle. It's not going to be Tether, because if you can hold hostage the underlying bank deposits of these centralized stablecoins, then it defeats of DeFi altogether. So it stands to reason that you need a censorship-resistant type of money that is unbiased, cannot be seized by regulators, cannot be manipulated with, cannot be tempered. And currently, right now, the clear market leader for that is Terra USD, the only decentralized stablecoin in the market.
Well, in all fairness, you can't seize assets that don't exist. So let's not, But anyway, getting back to decentralization, how do you see Terraform Labs decentralizing ultimately? Like, how do you have a roadmap for how that's going to go full on?
I mean, no, that question doesn't make sense. Like, Terraform Labs as a legal entity doesn't need to decentralize. What needs to decentralize is the Terra network. And today, every single day it's becoming more decentralized, right? So we don't run any nodes in the network, right? Most of the applications that run on top of Terra are by third. More and more, there's more people that are participating in governance, that are holding Terra assets, that are holding the Luna governance asset. So overall, I think it's just a question of, like, Terraform Labs is going to continue to do the things that it does. It's going to try to ship, amazing products, try to deliver value to customers and users. And, I think we're just going to continue to see more competition. So that's how a decentralized economy develops, right?
I wonder, and you kind of alluded to this, it sounds like you're not interested in the United States at all. I wonder if you could tell us why, and maybe that's part of the reason why you're based in Asia to begin with.
No, I am Asian. As you can see, I was born in Asia. It's just a question that, when it's fascinating when talking to Americans that they're sort of obsessed with American policy and American regulators and things like that, it's quite possible that in other parts of the world that they have different priorities and different things to pay attention to.
What?
It's not that I'm not interested in the United States. It's just that I'm interested in the entire world because I'm not from the United States.
No, I get it, but it sounds like you're just not interested, in when we ask, how would you want to see policy shaped? You seemed in the U.S. you're not interested.
No, I'm interested in global policy. I'm not particularly interested in how U.S. policy shapes around crypto or, particularly algorithmic stablecoins. It doesn't really impact my life. I am interested casually in terms of how the global discord around public policy is shaped, not specifically the public policy of one nation.
And how would you see that shaping?
Global treatment around crypto?
Sure.
Well, I think, one of the things that I believe in is that crypto is one of the best movements that has ever happened to the internet. It's one of those things where I believe that the true purpose of government is protection of private property. And it's the first time through things like fungible assets like Bitcoin, fungible assets like Luna, fungible assets like Solana, whereby true property rights have been able to be enforced on the internet. So prior to this, the only way to, sort of have commerce or human interactions with economic values like advertisements or sale of services. Now that's changing by having, decentralized money, right, sort of form the commerce and transactional layer of the internet such that you can have true property rights on the open web. So I think over time, once you have a phenomenal change in technology like this, it's going to get adopted. It's just a question of time. And I think public policy frameworks, if they're acting in the interest of the people, which I believe they are, they're going to grow to sort of adapt. They're going to sort of embrace these types of technological innovations.
Now, I mean, of course, you might not have interest in U.S. government or U.S. policy, but nonetheless, the U.S. dollar is still a major player in the cryptocurrency market, like it or not. I mean, can you ignore American policy if, for instance, Bitcoin, most of it is denominated in U.S. dollars, and how funds flow still goes through the U.S. The U.S. isn't just a small player; it's a big player in the global economy. Doesn't it matter?
I'm not saying that it doesn't matter, but just to be clear, 80% of all spot volume isn't denominated in the dollar; it's denominated in Tether, which is different.
Right, which is
right?
weirdly...
And I think that clarification is very important. So U.S. policy, insofar as it impacts, main veins of crypto, I think is very important. But insofar as like regulation of cryptocurrencies in general, I don't think that's feasible, nor that interesting.
But that Tether is still denominated, is still to be backed allegedly by U.S. dollar assets or U.S. dollar denominated assets. So again, don't you have an interest in having, at least trying to have a say in what and how things are regulated for your industry?
That actually, like, the fact that Circle being regulated is good for Terra, right? Because it's a perfect alternative, perfect competitive good to centralized stablecoins. So, for example, if centralized stablecoins started to get more regulated, like banks or let's say fintech applications, then all the dollars, about $100 billion worth that's locked up in centralized stablecoins, flow to about $10 billion worth of decentralized stablecoins. So from that perspective, I don't really believe that regulating centralized stablecoins is going to be an end or be a systemic risk to crypto. I think it's a growth opportunity for decentralized stablecoins.
Well,
and if you talk to builders that are creating different things on DeFi now, they have a pronounced preference for building on decentralized stablecoins because they realize that building on centralized stablecoins is not sustainable.
So do you eventually see decentralized stablecoins or algorithmic stablecoins like Terra surpassing the market cap of, say, Tether and the use of Tether?
Well, it's close to 10 billion now, so it only has to 7x, right?
Okay. And what is
And we
your
did more
outlook
than
for
that this year, so
2022?
I think we'll get there.